Hello and welcome to another edition of Stockwatch. So we see that the last few trading sessions has brought a bit of a sell-off on big technology sector stocks such as Apple and Microsoft. And we're just checking today if it's a cause for concern or if it's just a slight pullback in the continued rally and ascension to record highs. Obviously, after the first wave of the pandemic came to a close, we saw quite a big boost in technology stocks in general, and obviously since the Pfizer announcement on 9th of November that it had its vaccination license and ready to go, it had seen a bigger boom in profits as well. But you know, Microsoft have been in the headlines over the last few trading sessions as the US is expressing growing concerns over a hack on Microsoft's Exchange email software that the tech company has apparently already blamed on China. And even the White House press secretary has spoken out at this being an active threat and has put the new Biden administration under pressure to respond. But China and Russia both specifically have denied any involvement in the hack. So quite interesting developments there. And also Apple has lost its $2 trillion market cap for the first time this year as share dropped over 4% on Monday. So Apple was the first publicly traded company to hit $2 trillion back in August 2020, and it looks to try and cap off $3 trillion by the end of 21, which it said at the beginning of the year. So we'll just have to wait how that's going to pan out. Obviously, it recorded $100 billion revenues in its Q1 earnings report earlier this year. So we'll just have to see if it's going to come into fruition. So I've just been looking at some statistics here. So obviously, as you can see, the market cap has fallen below 2 trillion, and we just want to see the daily range now, if it's going to drop below 100 or if it can keep that $100 range, then it should probably start propelling. As you can see, over the 5 days we've seen this plummet in prices, but we'll have to wait and see if it's going to be more detrimental in the long run. And you know, analyst ratings as well, we've had overweight, which is quite good for the company still. You know, overweight means it's, you know, it's not actually a buy, but it's, you know, it's a modest buy, let's say. So, you know, you can see that it's more on the buy side than it is the sell side at the moment, which is quite good. And just taking a quick look on Microsoft as well, you know, the threat of something happening with this email cyber attacks, it's happened before. So it's just a matter of if it's going to, you know, get back into the swing of things and try and put this behind it. It hasn't really been very detrimental. As you can see, over the 5-day period, we've seen some choppy action here. It's down over the course of a week, but not really something, well, not any cause for concerns at the moment. So we'll just keep an eye on that as we go in. And again, the consensus is actually on a buy, which is very, very good for the company. So analyst ratings are really pushing for the stock there. So the last time I actually looked at Apple, I was looking at these peaks really to see if it was going to start pushing or falling lower on the troughs. You know, I'll just bring it out a little bit. I've just got the assistance of the Ichimoku cloud like I usually have. We've seen this vast accentuation up until, you know, the beginning of September. Then we saw the sell-off in tech stocks, but you know, since then it has been on quite a nice standing upward ascension until recently, where we saw a bit of a sell-off. Now, the last time I looked at it, I was in this $10 range here at 128, and it was either go one way or the other, up $10 to 138 or down below 118. Now we can see the drop down to 118. We've had this bearish divergence on the RSI as well. So now I'll be looking at prices probably dropping even further, and then I'm going to be probably looking at these recent lows here that we've had. So, you know, now my next target is, I put a sell position in here at the 118 because I thought if it does drop, then I'll be looking at this for the next target, which is roughly just about the 108. I'm going in $10 stages at the moment because that's what it seems to be reacting to probably a little bit better. And as you can see, the Ichimoku cloud is really weighing heavy on prices. So just a couple of factors to take into account on Microsoft, and just a quick look on Apple as well. Sorry, that was Apple. Just a quick look on Microsoft as well. Again, we've got this hidden divergence here, which could start propelling prices higher because we've seen the prices just flirting and bouncing off the top border of the Ichimoku cloud. So again, as you can see, there's a nice bounce here. Prices did dip, but they closed on a doji, and you've seen this closure just at the top end of the border. So again, I'll be looking for prices to start pushing higher if we don't get any resistance, and this would be a good point for me before we saw this gap in the market. So roughly about the high end of $230. However, if it does start piercing the cloud, then obviously we've got these recent lows that I'll be looking at as well, and obviously further indications on the oscillators and any indicators that you may use yourself. So just something to keep in mind for tech stocks as we go into the trading weeks. That's all from the Stock Watch today. Thank you very much for joining me. If you have any comments or questions, please feel free to add them to the post, and I'll get back to you as soon as possible. Have a great trading day ahead, and bye for now.